The price of Bitcoin is exploding and something really big is coming that nobody's talking about. But why is Bitcoin going up now? And will we get rejected at the same level that sent us down whenever the ETFs were approved? The price of Bitcoin is currently sitting at about $48,000, and it looks like it might be running into the same resistance that rejected us back whenever the ETFs were approved. And if we do get rejected here, that might actually be a double top formation, which is ultra bearish really. But I think this time we might actually break above this and make a higher high, because for one thing, right now, the GBTC trust is pretty much done selling off. As you can see, they only sold 2.25 thousand Bitcoin in the past one day, which is drastically down since they sold about 152,000 in the past 30 days. They still have 466,000 Bitcoin, but it looks like the selling pressure has subsided, and maybe they'll actually start to buy some more now as the price increases and people start to FOMO into their new ETF. Whenever those ETFs were approved and the GBT trust was actually converted into an ETF, a lot of people wanted to sell their Bitcoin because they had been trapped in the GBTC trust for quite a while. And usually whenever someone sells off a significant amount of Bitcoin, cryptocurrency, or really anything else, it's going to go through an OTC desk, which means that it's not usually going to have a significant and immediate impact on the price. According to this article on CoinDesk, it says, over-the-counter or OTC trade desks facilitate trading between two parties without revealing information about the trade to the public via an exchange, order book, or otherwise. This is pretty much like it being peer-to-peer, and basically if I was to sell you some Bitcoin and not do it on an exchange, then we could just decide whatever price we want to, and nobody has to be the wiser of how much we spent or how much Bitcoin was traded hands. It says crypto OTC trading is relatively opaque since no one beyond the transacting parties are aware of the price and volume of assets being traded. Moreover, the OTC trades are typically insulated from wider market fluctuations that occur on exchanges. Basically, this means that the OTC trading desk has a bunch of people lined up that they expect to want to sell their Bitcoin coming up pretty soon. And whenever they get a call from somebody that wants to pick up some Bitcoin, they go ahead and contact one of the people that previously said they want to sell some Bitcoin, and then they help them facilitate the trade. But if they don't have anybody who's going to be lined up to sell some Bitcoin, then they actually might have to go on to the regular market or buy through an exchange, which will eventually impact the price. But as long as these OTC trades have a bunch of people lined up that want to trade, it might not actually impact the price very much, and I think that's why we're starting to see things move now. Previously, before the ETF was approved, a bunch of people were anticipating a sell the news event, so these OTC desks probably had a bunch of sells lined up. But now that the GBTC sell-off has subsided, it looks like maybe we're going to start seeing these buying pressures take effect, because these OTC desks might actually have to start buying from miners or just the general market if they can't get the Bitcoin to fund these ETFs from GBTC anymore. It looks like there's a lot of really big things coming up for Bitcoin pretty soon, but this could just be the tip of the iceberg because it looks like the whole world economy is about to flip on its head. Here we have an article from Business Insider that says the commercial real estate crisis is going to prompt the Fed's first rate cut in May. Inflation is on its way back to the Federal Reserve's target of 2%, with markets even getting another encouraging revision on Friday. Yet, nearing mission accomplished on inflation won't be the reason the central bank cuts rates, according to one top economist. Instead, Kamal Srikumar, president of Srikumar Global Strategies, says the ongoing commercial real estate crisis will force the Fed to cut rates as early as May. He says, I see what I call a commercial real estate tsunami that's coming. The timing? You might say it's not 2 months, it's 4 months, but somewhere in the first half of the year. That's why I picked the May or June meetings for when rates would be cut. Before the previous Fed meeting, it looked like we had about a 50-50 chance of the Fed actually doing a cut in that meeting, but they held strong with the pause, and now it looks like we have an 84% chance of them doing the same in the next one. The next meeting is on March 20th, and Kumar was saying he expects the first cut in May, and it looks like the market is pretty much agreeing with them, since it looks like currently we have about a 52% chance of the first rate cut being 0.25% or 25 basis points happening on May 1st, in accordance with what the Fed has been saying. This article goes on to say, though, lessons from the 2008 financial crisis show that the Fed should cut rates sooner rather than later to avoid the worst of the pain. Don't act like you did in September of 2008, allowing Lehman Brothers to go bankrupt. Supposing you had acted in July or August of 2008 and you had taken essential steps, the drop would not have been as severe as it turned out to be. As I've said in some of my previous videos, usually whenever we start to see cracks really forming in the system, the Fed has to come out and do an emergency meeting where they cut rates drastically, almost to 0%. Right now, it looks like we're currently expecting them to start dropping interest rates by 25 basis points, but historically, that's just not how it usually goes. It says fears of a crisis among U.S. regional banks were rekindled in the last week as New York Community Bank saw its stock plunge after it reported a disappointing earnings and slashed its dividend to shore up capital. The fears stem in part from exposure to commercial real estate. Also, though, New York Community Bank was one of the banks that bought up all of the assets from the previous failures that we saw last year. According to this article on Barron's, new trouble for New York Community Bank Corp and America's top regional banks feels right around the corner, just as the Federal Reserve is about getting ready to shut down the emergency lending window it opened nearly a year ago. So it looks like it's not just the real estate crisis that we're going to have to contend with, but also it looks like we might see a continuation of the bank run that started last year that the Fed put on pause with their Bank Term Funding Program. It says the Fed launched the Bank Term Funding Program, or BTFP, after the collapse of Silicon Valley Bank and other institutions in mid-March. The rescue program aimed at calming depositors and investors let banks and other financial institutions take up a year-long term loan from the Fed using beaten-down bonds as collateral. The Fed's willingness to accept those bonds at par or face value made BTFP an attractive source of liquidity. You may remember that all of these banks had interest rate risk going on, and they had bought a bunch of bonds at low interest rates, expecting them to stay there, and whenever they went way up, they started to lose a whole bunch of money, and now the Fed has been accepting those bonds at their face value and not their mark-to-market price. If we continue to see these banks suffering with interest rate risk, then this could start to take effect again, causing a continuation of the bank run that we started to see and that the Fed put a pause on last year, because as it continues to say, BTFP is closing down on March 11th, exactly 1 month from now, as scheduled. This is straight from the Fed as they said it last month, and that made sense when it appeared that banks had made it through the worst of last year's turmoil, brought on by the steep decline in the value of treasuries and mortgage-backed securities. But now the timing appears inconvenient at best, given the problems that have shown up at New York Community Bank Corp. I guess we're just going to have to wait and see if this New York Community Bank Corp thing starts to cause a contagion in the system, but I think we're coming to the end of this economic cycle here pretty soon, and in my opinion, the Fed is probably going to cut rates this year, but they're not going to do it by 25 basis points. As they always do, they're probably going to drop them almost to zero again and start pumping liquidity back into the system. Here we have the 10-year Treasury constant maturity minus the 2-year Treasury constant maturity, or the 2-10 yield curve as many people call it. And as you can see right now, it looks like the yield curve is starting to steepen a little bit, which as you can also see, this usually does happen right before the economy dips into a recession, indicated by these gray bars. Usually whenever we start to see this yield curve steepen like this, it means that a recession is just a couple of months away. In my opinion, we've probably already been dipping in and out of a recession for the past year or so, but this gray bar usually indicates whenever the government announces one, and that's what everybody's going to be paying attention to. Here we have the federal funds rate over the same time frame, and as you can see, it usually does start to dip significantly right before these gray bars start to show up. And that, I think, is because the Fed sees the yield curve starting to steepen here, and in anticipation of the economy falling off a cliff, they start to lower interest rates so that people will start to borrow again and boost up the economy, hopefully trying to avoid a recession, but ultimately trying to pull us out of one whenever we dip into it. Really, that's just a long-winded way of me saying that I think we're pretty much getting to the deadline here where the Fed is going to have to start lowering interest rates pretty significantly, or else the economy is going to continue falling off a cliff into this recession. And since we're going into an election year, I think the Fed is going to have to add liquidity back into the system, because that's just what the government does to buy votes whenever it comes to this time every 4 years or so. A lot of times we do see them do 25 basis points at the beginning for the first couple of rate cuts before the economy really starts to fall off, and then they have to be more severe with their cuts. And I think that's probably what we're going to see here again. So maybe we're going to be seeing these 25 basis point cuts here in May or even June, but I think that eventually in one of these meetings, probably by the end of the year, we're going to see the Fed actually come out and say that things are going a lot worse than they expected. And whenever that happens, they're going to cut these rates like crazy. And that's going to have a significant impact on the price of Bitcoin. What kind of impact is it going to have, though? If the economy is falling off a cliff and people just have less money to spend, then wouldn't that cause the price of Bitcoin to go down? Well, I keep showing this video right here, but I think it's worth playing it again because everybody needs to hear this. This is Larry Fink, the CEO of BlackRock, the biggest asset manager in the world with more than $10 trillion in assets under management. Whenever Larry Fink started to talk about ESG, the whole world adopted that narrative, and a few months back, he dropped the ESG narrative, picking up the Bitcoin one, and this is what he has to say about Bitcoin when it comes to global uncertainty.
The rally today is about a flight to quality. And I think there's more people running into a flight to quality, whether that is in treasuries, gold, or crypto, depending on how you think about it. And I believe crypto will play that type of role as a flight to quality.
So let me know what you guys think in the comments. Will Bitcoin actually be a flight to quality and a flight to safety in case of an economic collapse? Or is it going to tank right along with the stock market and everything else? Either way, thank you guys so much for watching, and don't forget to hit the like and subscribe button. But most importantly, don't forget to have a wonderful day, and I'll see you next time. Bye.